When I was living in my car in California, I had quite an affinity for the ponies. Loved horse races. Far turn, the home stretch, all riveting. But you know what? I don't like the horse races I cover now. No, I still like the thoroughbreds. Question to Saratoga 2 months ago. I'm talking about the endless horse race among Microsoft, Apple, and Nvidia. The race for the title of largest company on Earth. Who's in first with a $3.5 trillion market cap? Who's placing at $3.25 trillion and who's just showing at $3.1 trillion? Nor do I like comparing the net worth of Nvidia CEO Jensen Huang to the market cap of Intel or Boeing, because after all, why shouldn't he be worth that much? As Babe Ruth said when he was grilled about making 80 G's to President Hoover's 75,000, I know, but I had a better year than Hoover. Low bar. I know many of you think I'm drinking the Kool-Aid straight from Nvidia's water fountain, which is why I want to give you a refresher about why I believe in this one and why you shouldn't get so hung up on the magnitude of its market capitalization. After all, every time this amazing stock passes another milestone, I hear that it's over. It was over when it passed Intel, over when it passed Cisco, over when it passed Amazon. I say it's not actually over until it's actually over. And in Nvidia's case, that's going to be a very long time from now. Here's why.
Welcome to another riveting episode in the saga of market marvels, where the AI revolution isn't just coming, it's already here. As if scripted by a Hollywood screenwriter, Nvidia and Broadcom have catapulted their stocks to dizzying heights, capturing the imaginations of investors across the globe. These two tech behemoths are entrenched in a thrilling race to command the booming AI market landscape. While Nvidia solidifies its reputation as the go-to provider for high-end GPUs, Broadcom quietly but steadily builds on its diversified chip and software empire. With Nvidia's stock skyrocketing by 510% and Broadcom's impressive 260% ascent over the past 3 years. This isn't merely an opportunity, it's a phenomenon. But before diving into where the gold might be hidden, let's dissect why these stocks are the market's talk of the town and understand which one might just be the ticket to prosperity in this AI-driven era. Welcome back, everyone, to Investocracy.
Almost every company that competes with Nvidia has limits. Google and Meta are, for the most part, advertising firms. Amazon's a merchant. Microsoft makes software. Apple's a hardware stream and a service stream. Nvidia has no such limitations. It simply makes computing power, the best, most efficient computing power on Earth. Countless machines need to be replaced by Nvidia's platform. Maybe it's more than $1 trillion worth. Nvidia is an inventor of pretty much everything it wants to invent because everything needs to be digitized, and Nvidia has the equipment to digitize. Nvidia's platform gets smarter every year and cheaper every year and burns relatively less electricity every year. So the more these big companies buy from Nvidia, the bigger the return. It's a deflationary machine with a great return on investment. Or think of it like this. You want driverless cars? You need an onboard brain, you need a simulation brain, and you need a training brain. 3 brains. Only Nvidia makes all 3. If you believe in autonomous driving, then Nvidia will dominate what could be the biggest market in the world. You need robot brains, Nvidia. You need healthcare brains, Nvidia. Climate, Nvidia. Industrial, Nvidia. Plus, there's no zero sum here. Maybe that's why it's so joyous to me. Nvidia is more of a rising tide that lifts all customer boats. Like I said at the top, their technology is so good that it's given birth to entire industries. If Oracle wants to build a data center, Larry Ellison picks up the phone, calls Jensen Huang, is done. If Meta wants to compete with ChatGPT and Claude or anyone else, Zuckerberg just calls Jensen Huang. He has to if he wants Meta AI to stay competitive. Unlike so many other companies, there's no Jensen wins, you lose. Each iteration, and there may be many, many iterations, creates more computing power, and the demand for more computing power is insatiable. It probably always will be, and NVIDIA is where you get it. The customers will never run out of demand. So let's stop trying to figure out who wins the horse race. There is no horse race. There's just this one company out there with products that are faster, smarter, and better than everyone else's, a company that can raise everybody's game, run by one of the most intelligent, thoughtful geniuses I have ever had the pleasure to meet. And that's why I say, NVIDIA, own it, don't trade it. Oh, and if you insist, NVIDIA's Secretariat. He won the Belmont Stakes by 31 lengths, the greatest margin ever. The others? Oh, they're still out there running. I like to say there's always a bull market somewhere. I promise I'd fight it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
With eyes wide open, investors have latched onto Nvidia, akin to modern-day prospectors in an AI gold rush. Nvidia, primarily recognized for its high-powered gaming GPUs, has deftly pivoted, transforming itself into a titan in the data center segment. Now, 87% of Nvidia's revenue flows from its data center chips, which power the likes of OpenAI, Microsoft, Meta Platforms, and Google's AI-driven services. An undeniable juggernaut, Nvidia has been a fertile ground for growth, with an expected revenue compound annual growth rate of 50% and an earnings per share compound annual growth rate of 56% from fiscal 2024 through 2027. Now, for those wondering whether Nvidia has outpaced reality, consider this. It's trading at 34 times next year's earnings, not an astronomical leap when juxtaposed against its spectacular growth. And for those still skeptical, remember it's Wall Street, a place where 2 plus 2 equals 4, but only if you know when to count. As for the ever-diversified Broadcom, its tale is slightly different but equally compelling. Once known as Avago, it now brandishes a dual-core business with lucrative semiconductor offerings and a robust arsenal of infrastructure software. This balancing act between hardware and software, coupled with strategic acquisitions, positions Broadcom as a more diversified entrant into the AI scene. Its anticipated tripling of AI chip sales to nearly $12 billion by fiscal year-end 2024 further underscores its commitment to AI-centric growth. However, Broadcom navigates slower growth projections, with a revenue CAGR of only 24% through fiscal 2026. In stock market parlance, call it the tortoise that doesn't mind the hare's blazing speed, because it's got a more substantial dividend yield of 1.16% to fall back on when the day's race is done. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
Investors are questioning whether or not Nvidia can keep outperforming its past growth, and our next guest is raising some concerns about Nvidia's overall valuation. Here with her take on the latest results is Beth Kindig, IO Fund lead tech analyst. And Beth, look, we did have lofty expectations heading into this report. Nvidia, it did deliver, but not at the level that Wall Street was expecting. So it's now the time for investors to recalibrate their expectations when it comes to this company.
Hi, so good to see you the day after NVIDIA reported. I would push back on that. NVIDIA had a great report. The information had reported, this is a media outlet, that data centers would not be stood up in Q1. That would run into Q2, completely thrown off the table last night. Several billions of dollars of Blackwell in Q4. Data centers will be stood up in Q1. That is what investors were expecting. That is what Wall Street was expecting. That's why things are being revised up, and they were never revised down. Wall Street obviously is very closely tied to estimates, and we never saw revisions downward based on the so-called delay. That's what you want to piece together here is NVIDIA coming in according to what Wall Street's expectations are, or are they beating? They beat, and they're saying Blackwell is basically on time. So I would push back on that. We cover this stock very, very closely. Blackwell is not a concern. If anything, it's extremely bullish. There are some production numbers buried in their report, up 48% quarter over quarter. Could not be more bullish in terms of Blackwell. Now, the valuation, when you have a high flyer like NVIDIA, can get stretched at times. Going into the print, we warned our members that this valuation is looking a little toppy. What we need is for the fiscal year estimates next year to go up. So we're in a waiting game for analysts to revise their estimates upward, which eventually they will. But until then, the valuation is stretched.
While Nvidia gleans praises for its innovation and market dominance, Broadcom quietly charms investors with its stable footing and diversified growth ethos. Even so, with earnings multiplying faster than a high-frequency trading algorithm, Nvidia holds a formidable lead in this AI face-off. It also stars in another gripping subplot, the strategic emergence of its AI-powered software, thereby encroaching upon realms typically ruled by companies like Palantir. Speaking of Palantir, it has carved out its niche as a potent force in AI and ML software platforms, according to Forrester and Dresner Advisory Services. Its future looks bright amid rising client adoption of its artificial intelligence platform, with revenue looking to swell by a quarter over last year's haul. Nevertheless, Nvidia's nominally cheaper valuation, faster pace of growth, and bridging of both hardware and software domains clearly delineate it as today's darling of AI pursuits. For those investors who think of Nvidia as a festival where everyone wants to buy tickets, Palantir might just be the afterparty, full of unforeseen surprises, powered by its $4.3 billion revenue pipeline. Still, don't be fooled by appearances. Nvidia might be shoring up some Palantir ground amidst its own robust gains. Nevertheless, Nvidia stands at the forefront of this unfolding AI story, narrating a bullish tale, one GPU at a time. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Okay, so if the valuation is stretched, then where does that put them on the pathway towards reaching some of the targets that you've set forth? You have some of the kind of loftier long-term expectations on a market cap front for NVIDIA. I believe we were talking about $10 trillion last time you came on. And so for NVIDIA to really hit that in stride over years, what do you see as the pathway towards growth into that?
The pathway to growth is to pay very close attention to NVIDIA around the fiscal year guide. That is always NVIDIA's big moment, number one. Number two, the second biggest moment of the year for NVIDIA will be when Blackwell is shipping in volume. This will be your Q2 report, but we'll get some signs in Q1 with that forward guide. It's going to be fireworks is how I would put it. Absolute ultimate fireworks for Blackwell will come in Q1 with that Q2 guide. You have to really realize that these guys are on a product release cycle. Therefore, Hopper was out, roughly 2 years ago, began shipping in October. Stock was down 60%. The following Q1 and Q2 report in 2023 were blowouts. So you have to understand that there's a shipping cycle that occurs for this company. Some media outlets have blown that out of proportion. It's absolutely on time. Early next year will be fireworks again for NVIDIA, and we will be on track for that $10 trillion.
As we stand at the intersection where innovation meets investment, NVIDIA emerges as the banner carrier for those looking to capitalize on AI's unstoppable journey. With its dominance clearly evinced by current stock momentum and analyst forecasts projecting revenues to peak at $176 billion by fiscal 2026, NVIDIA represents not just a share of the market, but an evocative slice of tomorrow. A tomorrow layered with immense opportunities and colossal financial promise. And despite regulatory roadblocks or potential economic slowdowns, NVIDIA's path seems paved with profitability. In contrast, Broadcom glides along with a tactful blend of diversification, handling industry swings with aplomb, all the while instructing retail and institutional investors on the virtue of being steadfast if not initially fast. Yet, if it's unbridled, explosive growth, and an innovative edge you seek with a streamlined focus on AI, NVIDIA clearly takes home the prize. With blue skies stretching wide over NVIDIA's horizon, its current position points to an even bigger stage, a stage that welcomes eager investors looking to tap into the heartbeat of AI's future. But what do you think? Is it NVIDIA or Broadcom that piques your interest, or is Palantir the underdog here? Share your thoughts on which company you believe will forge the path to victory in this AI arms race. Let's continue to explore this electrifying field together, one tick of the stock market symbol at a time. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.